Neil Chopra will join us from remote, and he will talk about crypto trading and crypto custody playbook for banks.
All right. Thank you, everyone, for joining, and good day. I know we've got folks from across the world joining these sessions, so really appreciate everyone taking the time out to join this particular session, which is, as you can see, crypto trading and custody playbook for banks. My name is Neil Chopra, and I am on the business solutions team at Fireblocks, where we are enabling and delivering secure wallet infrastructure technology that enables and allows for institutions, whether those are crypto native banks, fintechs, and whatnot, to really enable and grow and scale digital asset and crypto solutions and products to market to their existing customer bases. Prior to joining Fireblocks, I was at Ripple for about 3.5 years, working with banks and fintechs to enable differentiated payment solutions and offerings to their customer segments in the cross-border payments world. And prior to that, I was focused on, or spent my career in corporate treasury with a focus on global liquidity management, cash liquidity, and payments projects. And that's really where I learned a lot of the inefficiencies in today's sort of global infrastructure as it relates to delivering products and services to customers and various market segments, which is really one of the main reasons that I joined Fireblocks, where, as I mentioned, we're delivering a secure wallet infrastructure that allows for multiple customer segments that we can see down here on the bottom right to enable these products and services in the digital asset space. And we've, of course, seen a lot of adoption across the board with crypto native institutions, OTC, market makers, liquidity providers, and lending providers in this space. And I think the really exciting opportunity that we're starting to see now is fintechs, and I'd call them the more traditional financial institutions globally, starting to engage in these types of conversations and discussions to better understand where and how they can fit crypto, digital asset, and blockchain solutions within their existing infrastructure to be able to deliver some of these differentiated products and services. And really, I want to sort of start by taking a step back and explaining where and how we've seen the growth in the digital asset space and how that really translates to opportunities for the fintech and traditional financial institution markets. And we can see here just a very quick snapshot since 2017 of the growth, not only of Bitcoin market cap, which of course has been in the news quite a lot recently as well, but also in the growth of unique wallets that have been created within the blockchain and crypto ecosystem. And I think this is some really exciting news because it does show that not only are there the existing or initial investors in this asset class and space, but we've also seen a growth, whether this is from the retail investors as well as some of the institutional money that has started to come into the space and really start to drive the adoption and growth of this particular market. I think when we relate that back to a lot of the announcements that we've seen recently of more traditional FIs in combination with some of these fintechs stepping into the space, Gemini launching a credit card with Bitcoin rewards, Revolut stating that 30% of their 10 million app users have traded cryptocurrencies in the past month. JP Morgan and some of the more traditional institutions starting to get into the space by enabling these products and services to their customers. I think this is just a testament to the growth and what I believe will be the continued growth of these types of players getting into this space. And I think that what we've seen consistently is a lot of these institutions seeing the adoption from their customer base as these products and services are being built. And when we look at really what it means to offer digital asset services and products, it's really understanding from a bank perspective what is most comfortable for their existing business and customer base to understand really where and how they get involved in these product offerings. And so what we've really seen from a Fireblocks perspective in engaging with a wide variety of sizes and types of banks out in the market is that there really is a natural evolution and progression for the roadmap of these types of services. And so when we look at really, I'll call it the simple use case, which is not necessarily always the case when dealing with a traditional financial institution, but really just looking at a custody service offering where next to within the mobile banking app, we see checkings and savings accounts now offering the ability to custody digital assets, whether those are stable coins, Bitcoin, et cetera. Just really enabling a bank grade custody service offering, I think, is of a huge benefit, not only to the financial institution to attract or to gain market share from other competitors, but also in the light of being able to now grow and drive from this initial custody solution into other products and offerings, whether those are trading and brokerage, so that now once you are custodying these assets on behalf of your clients, enabling and allowing them to trade through this platform to buy and sell various types of assets. Also, I think it's been talked about and will be talked about throughout this conference is this lending opportunity where not only can you custody, allow for trading and brokerage, but enable lending opportunities for your customers to now take these assets, lend them out through you to providers, whether those are direct bilateral lending relationships, or we'll talk through the DeFi piece in a little more detail in a second here. But again, the ability to start with custody, migrate and grow into trading and brokerage, direct lending, and then near and dear to my heart is next is with my experience at Ripple, the payments and receivables use case, where, as we know, cross-border and international payments are a very inefficient way to, or the infrastructure today is very inefficient, very costly, takes a lot of time, and very opaque in terms of where the payment is at any given time. Whereas with blockchain and digital assets, whether you're using Bitcoin, or I'll call them the more traditional digital assets and cryptos, or stable coins, which are becoming now very prevalent out there in the market, is the ability to enable and allow for your customers and market segments to now pay and receive within the digital asset or crypto ecosystem, I think is a huge benefit for all those involved. And again, this is really sort of the evolution of enabling various use cases on top of one another as banks are looking to grow and scale these products and services. But then we look at, in the center here, use cases that I think will start to sort of insert themselves at various times within the journey of a bank in this particular market. And so when we talk to or speak to a lot of the larger global banks, tokenization and taking a traditional asset, putting it within a blockchain infrastructure and the ability to now manage that is a huge value add from not only an operational perspective, but potentially from a liquidity and access perspective to really enable and allow for a new segment of customers to get involved in in certain types of assets. CBDC, central bank digital coins, is, of course, I think a hot topic across the globe, with a number of regulatory bodies and central banks stating that they're engaging in pilots, proofs of concepts, and are starting to build out plans for CBDCs. And so if and when those start to get traction, the ability to take a digital asset service or product offering from a traditional asset to now integrate or incorporate CBDCs, I think is a huge value add. And then when we look at some of the more, I'll call them crypto native types of offerings around staking and DeFi, I don't think that we're necessarily in a place in really many countries from a regulatory perspective for banks to start engaging in these types of use cases. But again, if and when you start to get comfortable with some of these, I'll call them more vanilla or traditional types of products and services, being able to now migrate into the staking, DeFi, and some of the more future driven use cases and products and services is very, very interesting. When it comes to what is the opportunity from a revenue perspective for banks in this particular space? I think really the sky is the limit at this point. If we think back to the growth in Bitcoin market cap and crypto wallets globally, we're starting to really see that flywheel turn in terms of this adoption. And so if we look at sort of the opportunity from a banking perspective, if we take a number of 500 million in customer digital assets or crypto held in custody through a service offering, that really pales in comparison to some of the other players in this space. We can see here Coinbase at about 220 billion, Gemini at about 30 billion. Again, when we look at this relatively speaking and what we see out there in the market in terms of the growth and adoption, I think that really there's a ton of opportunity for a number of different players to really get involved in this space. And when we talk about what is that opportunity based upon the particular use cases, I think custody and deposits within the digital asset space is really going to help to drive new customers and market segments to various banks. So whether that's a traditional high net worth or retail customer, whether those are institutional custody services or some of the more forward-thinking banking as a service or fintech banks, enabling these types of solutions can certainly start to drive additional customers to your platform. And then I think the ability to then cross-sell additional products and services, even if that's outside of this crypto market, is a great opportunity as well. When we look at what is that opportunity from an actual numbers perspective as it relates to trading and lending as an example, if we take an assumption of 10x trading volumes of assets under custody and some of the numbers that we're seeing in terms of margins and spreads for digital asset trading businesses of 50 to 150 basis points, you can see here that that's approximately a 50 million revenue opportunity just with these low end numbers from an assets under custody and trading volume perspective. In the lending space, I think we're starting to see some really incredible yields we've seen anywhere from 6 to 15% for institutional grade lending, and the ability to then capture, let's call it 50% of those assets under custody by enabling what I'll call a crypto savings account is a very interesting revenue opportunity, especially if and when you can start to drive additional customers into your platform and enabling these types of solutions. From a payables and receivables perspective, the ability to charge on basis points for payments or receipts in digital assets and crypto is, again, I think something that we'll start to see become a lot more prevalent, especially as within the fintech space, we're seeing a lot of payment companies starting to enable digital asset solutions for payables and receivables because of the efficiencies, the transparency, and the low costs as it compares to some of the more traditional models. I've always said that the USD international payment is probably the most inefficient payment out there today, and enabling a USD stablecoin payment solution and offering, I think, would have huge value, not only in the retail remittance space, but more specifically in the B2B small business and supply chain use case. So what I wanted to do here is, because a lot of the questions that we do get in these discussions is where and how can I enable this type of offering within my existing platform? And one of our great customers and partners, Revolut, has enabled crypto trading within their existing mobile application. And what we can see here is that if we look at the top end here, stocks, commodities, and crypto has really now just been added as a new asset class within their existing mobile application. So understanding where and how this fits within the existing online banking and mobile application channels that are going out to your customers is, of course, very important, and something that we have a lot of discussion around with some of our institutional customers. And then how do we now enable this unique type of experience within that application? And what you can see here with this quick video is the ability to now trade not just FX, sterling to euro, but being able to select sterling into ETH to make this 100 sterling purchase of Ethereum that would now be held within this wallet with the Revolut user. From a actual operational perspective and the ability to enable these types of products and services to customers, what we will typically engage in is more of a broad sort of set of use cases, and then really refining what are the business process flows associated with that particular use case. And so what we can see here is a simple buy, sell, custody process flow, where again, it's a customer that would be coming into the UI mobile application saying that I want to create a Bitcoin account or wallet with this particular financial institution, would then enable the ability to deposit fiat and initiate a purchase of that Bitcoin, which would ultimately get executed through a market maker. And then that receiving financial institution or that traditional FI enabling this would then need the ability to receive the Bitcoin from their trading partner to ultimately custody that, in this particular instance, within the Fireblocks wallet infrastructure, so that those assets are now being held in custody by this financial institution on behalf of their customer, who can now display and disclose any of the balances that are being held, again, sitting within that fiat checking savings account, now having a crypto wallet enabled from a custody and trading perspective. The other main topic of conversation, especially with some of the entrants who are newer into this space, is who do we engage internally on evaluating where and how to enable a digital asset or crypto business? And so I'm not going to go through every point here. I know I've got just about a minute left here, but really when we engage with a number of these institutions, it is being driven from the top down, where the executive and leadership team has really identified crypto and digital assets as a unique and differentiated product and service to bring to market. And so getting into this is really going to require that top-down leadership approach to ensure that all of the corresponding business units or teams internally are aligned in terms of what this priority is and ultimately how it would be developed. And so we can see here that innovation and strategy, the various business lines, whether that's going to be retail, institutional, fintech, custody, trading, capital markets, operations, legal and risk, of course, and then IT to understand where and how this integrates into those existing platforms are all teams which should be engaged. I would not say from day one necessarily, but through the evaluation of these new products and services, ensuring that all of the teams have a say and understand where and how this would be enabled within that existing banking infrastructure, technology, and of course, operationalizing those processes. So I know I'm at time here. Certainly do appreciate everyone joining. Please feel free, add me on LinkedIn, shoot me an email at neil@fireblocks.com. Anything that you'd like to discuss in more detail that we touched on here. I know 20 minutes isn't a lot of time to really dive into the detail, but very excited for the opportunities within the fintech and banking space as it relates to crypto and digital assets, and really looking forward to engaging with folks in the near future. Thanks again, and everyone has a great conference.
Thank you so much, Neil. I really like the way you explain. It's very, indulging.